All righty, let's get started. It's 1 o'clock and let's be on time. Today, a couple questions in the Discord group was, how do we set up different types of 1-1-2 trades? Get this question a lot. Since they're all a little different, and it sometimes makes it a little bit of a struggle to try to put on a 1-1-2. And 1-1-2 trades don't work for everything. So I found putting them on in gold extraordinarily difficult. Just the numbers don't match well with what you're doing. So let's go through a bunch of them today. I'm going to pick out about 6 different futures. If there's a certain future you want, pop it in the chat, and I'll make sure I cover it on how to set up a 1-1-2. I'll probably cover a good chunk of them anyway. But let's just jump in and start. And I think the one question in the Discord group today was on lean hogs. So let's start there. I'll try to let people in the chat or into the room here, and I'm going to mute everybody just in case. All right, you are all muted, so hopefully keep some of the noise down. Let me share my screen, and we'll jump into it. All right, here's the current account on the day. It's having a very nice day overall, so I think we're having a good day. Market continues to fly high, and we're up, I don't know, 3-4 grand, something like that right now. So having a good day overall in the market. I'll do my best to let people in, but I can't keep track of everybody. Yeah, I'll cover why it doesn't work on GC well. So we'll go through them all, and you'll see exactly what I see when we're doing it. And maybe there's some people here that have gotten some trades on that they really like. It doesn't have to be perfect. Anything works out there. And the great thing with the 1-1-2 trade is it's just so flexible. You can do anything depending on your outlook. And I think that's a key, is to look at some of the outlooks for what we're doing. So let's just jump in to the trade platform, and let's look at lean hogs. So a standard 1-1-2 for me is 60 DTE. The long-term 1-1-2s, 120 DTE. I did talk about this in one of the rooms yesterday. Well, why don't you just do the long-term 1-1-2 on everything? The reason for me being is, number one, it's long-term. It's 120 DTE out. They're great trades, don't get me wrong. But if you're just doing like a one-off trade here and there, I don't know that I want to wait 120 days. And even if I was to close the naked puts at, let's say, 95%, even 90%, I'm probably waiting 75, 80 days before I can close those naked puts. I don't know that I want to trade that I have to wait that long, that I don't always have one being laddered on all the time. So people still jumping in. So I'm trying to keep up. But I don't know that I want to be in a trade. Let's just use lean hogs here. I don't think I want to be in a lean hog trade for 120 days by itself. Now, if my strategy was I'm going to layer one on every month and always going to have 4 of these on, well, then it doesn't make sense to me to just do 60 days when if I'm always going to have 4 on, I can do the 120. But if I'm just going to do these like here and there, hey, I get some buying power, I'm already set on my core strategies, let's put some 1-1-2 trades on. I don't think going out 120 days makes a lot of sense, even though there's great advantages for buying power and getting further away, income, all of that stuff. I think it's still a good trade. And if you have that time period, that's fine. If you don't care about getting the money, and let's look at that and let's see how it would look here on lean hog. So I'm going to actually take some notes for myself as we go through here today. And you guys are all, I guess, blessed to get to see my face and decided to share it today. So, so there is a face behind the name. All right. So December would be so we're going to go 60 days. So this 65 day on lean hogs is what I would be looking at. I will set up my basic structure on everything first and make some guesstimates based upon PDS width. And then I'll look at the overall structure of the trade to see if it fits. So a couple quick things that we're going to do. Number one, we'll start with right around 25 delta. And I'm only going to go one wide. And at one point, I think I had figured out a good ratio of width on the PDS based upon the stock price. And I can't remember it anymore. So maybe we'll come across that today and we'll have a nice little piece here. So if we're doing lean hogs, one more entering. So if we're doing lean hogs here, it's a low dollar amount item. So anything to me that's under 100 is probably going to be one, maybe two wide at most. When you start to get up to $4,000 like an SPX or ES or something like that, then 50 points wide is closer to it. So when you start to think that maybe it's 10%-ish of the 10% makes sense, 1%. So maybe it's 1%, 1 to 2% of the actual value. So this is a $71 underlying. I'm going to start with a one wide in here right now, and then we'll figure it out. So we start with the longs around 25. I'll start at 27. We'll see how that goes. I'll go down to the 5 delta, and I'll add my 2. All right, so the 1-1-2 structure is on. Okay, the shorts are always at 25. Or I'm sorry, the longs are at 25 delta. The naked puts are at 5 delta, and then the width of the PDS, let's just use 1% of the size of the underlying as a rough gauge. So 1 to 2% of the size of the underlying, just as a rough guesstimate. All right, so this is what this would look like. How do we know if this thing's any good or not? The max profit is your tail profit, so that's not really what I'm looking for. I'm looking for, if you guys can tell me in chat, what's my monthly income goal? I don't know what yours is, but what do you guys know what my monthly income goal is? I'm sure you can put it in there in the chat. 3%. All right. So if my monthly income goal is 3%, then I want to make sure I'm getting 3% a month on this trade. So if I'm putting on a 60 DTE trade, you guys can all do the math, but what percent return do I want in 60 days? Okay, I want 6%. So if you answered 6% or you're thinking 6%, you'd be correct. All right, so I want to get at least 6% tail profit. So tail profit is my initial credit that I'm receiving. So tail profit to me has to be 3% a month. If I'm doing a 120 DTE trade, I got to get at least 12% or more for that trade. Typically, we get 20. Okay. In a regular 1-1-2 trade, in order for me to hit my numbers, I have to be generating 3% a month on my returns or more. So if I'm doing a 60 DTE trade, I need to generate 3% a month or 6% over 60 days. All right. So there's the foundation. Those are the core items that you need to put this on. All right. So we're at 65 days. We did roughly a 25-ish long here. We did roughly a 5 delta naked short puts. So let's take a look at the Analyze tab on this. All right. So now in the Analyze tab, I just want to see, does the tail profit up here give me 6% or better on this trade? I hope my voice holds up. So I'm getting $90, okay, right? And just so you know, on lean hogs here, it is a 400 multiplier, okay? So lean hogs, 400 multiplier. So if I'm putting on a trade for 20 cents times a 400 multiplier, that's $80, okay? That's my tail profit, okay? Yes, yes, and yes. Everybody's with me? All right, so perfect. We're all on the same page right now. So I've got 80 cents. It was 90 a minute ago. Divided by my buying power effect right now, which is 839. Okay, so this is yielding 9.5% of tail profit up here for the next 65 days. So check, check, and check. Okay, it hits all of my numbers that I want. Okay, I'm making well over 6%. Okay, my buying power is pretty nice on these. I do like these. Now, here's the next piece, and a little technical analysis can go a long way. I want to see on my short puts here, they're at 58. Now, 58 is how far down? So 58 from 72, roughly 14 points down. Okay, so 14 points down divided by roughly 72 bucks. This is almost a 20-point drop. So I have a 20-point down, 20% downside in this trade. Normally, I'm looking for a trap that's 5 to 6 times larger. Okay, so a 6x size trap. It's not set in stone. I think you can be a little forgiving on that, but that's what I'm looking for. So 480 is pretty good. That's exactly 6 times. So this trade worked out to be perfect. Okay, I'm pretty comfortable with doing them, so I got it right on the first try. But that's how I would do one on lean hogs here. This $58 put, when I'm looking at TA over here, is way below anything in the near term. This thing has been ranging since October of last year from 73 up to 105. Okay, and it took a pretty nasty hit back in August, huge gap down, and then it's pretty much just traded sideways. So there's lean hogs. I think that was on the turnover of that. So it gapped down massively on the future contract turnover. Something you got to watch a bit. When I look at all of the different potential, where's your prices on those? They're not too crazy out of line, but you've got a couple at 82, then 71, then 75. So you could see a $5 drop in the turnover from one futures contract to the next. So that's something we'll keep an eye on, but it shouldn't really affect that particular trade too much. Hopefully this makes sense. 3-year low is 63. Yeah. So I'm well below these. I'm just looking at my weekly chart, which goes out to about April of last year. So it's a year and a half out. If we haven't been there in a year and a half, I'm not too worried about it. So John, yeah, appreciate it. So 63. So how do you think this trade looks overall? Well, I think this looks pretty doggone good. In fact, I'd like to put this trade on right doggone now. So now you have to determine, so what's so look at fees. I typically, it's just the cost of me of doing business. It's going to take a chunk out of here for me. But what would my fees be if I was putting this on? I can't put it on this way because of fees, but I'd have to take one of these off. Okay. Fees on the PDS are going to be about $9. Okay, and fees on the naked put side, fees on the naked put itself, there's going to be 2 of those, would be about $9 as well. Okay, so it's about $18 per contract in fees. Now, what did I say I was making? $80, $18. Yeah, it's about 20-25% you're giving in fees here. It is what it is. Okay, if I'm okay making the money and giving up 25% in fees. If you think that's too rich for you to do, look for other underlyings. Futures, especially some of these unusual ones that I consider like lean hogs, live cattle, copper, those types of trades. I certainly consider those a little more unusual style. All right, so there's how we would set it up in lean hog. I did like that trade. I might actually consider putting that on today. Would I consider a naked put? All right, in order to consider a naked put, I would have to look at my criteria. It's a totally different trade. It's a totally different style of what I would want to be doing. So a naked put would be, I want to see something in a bullish move, which means for me, I need to see the weekly in a bullish move, and I need to see the daily in somewhat of a bullish move. So do I have that to do naked puts? Yeah. I think we've got on lean hogs on the weekly. We've got a decent little uptrend going. This big gap was, again, a turnover in futures contracts, but we have a decent uptrend. You've got MACD is going up. You've got RSI slightly going up, not quite to 50 yet, but it is moving higher, which I like. So I'll consider this bullish, even though you are below the 21 and the 50 EMAs and the 200. I consider it somewhat of a bullish move. On the daily, we are in an uptrend. MACD is running higher, RSI is running higher, and it's almost to 50, which is a good trigger point for me. So I do like the fact that I could potentially sell naked puts on this trade. So it would technically qualify. It's moving sideways to up, which is totally fine. And you can see that we have some lows back here around 71 in the last year and a half. So what would I do with that? If I was selling a naked put, there is no 90-day. I might use the 65-day as well. And I would probably put something on maybe around the 12 delta-ish mark, which I like to get at least a third to 25% of my credit to my buying power. So I'm pretty much in that range, almost a third around this 12 delta. Could you go a little higher? Yeah, because I think you've got support around 71 in this. So you could probably pick this thing up a bit more. Now you're putting this trade on. Your max profit is 320, but I'm going to stop out at a 50% profit target. So 50% profit, 2x loss. Okay, so you could put a naked put on lean hogs here. I don't think there's anything wrong with that trade. All right, so there's lean hogs. Let's take a look at something. So I think that was the main question in things. So let's take a look at some other potential trades. Let's see, can we do it in 6A? Well, we know we can because I have one in here and it's up 160%. But let's take a look at what I would do in 6A. Now, 6A, the Aussie dollar, which I do like. And I know I can't keep popping back and forth, but 6A, decent looking chart. I do like the nature of this chart in here, despite the sell-off that we've had due to the dollar strength. I think the dollar's tipping over a bit. So let's see how things work. And let's see where we go. So how would I do this one? Well, we got a 59-day. Okay, that's pretty close to 60. Boom, I like that. Let's jump into that. You've got a 24, and then I would go one strike lower because I really don't know. The width of this thing is 64 cents, so I'm going to stick down in here about one. About 1% or so of that. Width-wise, it's like 0.005, so I think we're fine. And then you don't have a 5 delta, you got a 4 and a 6. Looking at support, the lowest it's been in a year and a half has been 618, which is right here. So either way, we're pretty well below it. I like the Aussie dollar in here, and I would be okay with it in this range. So I'm going to add 2 of these of the 6 delta. And so here is the constructed trade on the Aussie dollar. All right, so we got a couple people jumping in, and we got some people that are not currently muted. So let's fix that. Okay. All right, so here's what this trade looks like. Is this a valid trade that I set up in here? All right, so in the tail here, am I getting at least 6% return? So I'm getting $60. Okay, so I'm going to make $60 on this because we know this is a 100,000 multiplier. Okay, so 6A is $100,000 or 100,000 multiplier, and I'm taking in 0.0006, so it's going to give me $60 using 884 margin. It's about 6.8%. So it works, right? So this is going to give me 6.8% in the tail up here. If I go the full bout of 60 days, I'm hoping to take it off slightly early at 95%. That's fine. And then does my trap give me roughly a 5 or 6x size? It gives me way more than that. It gives me like a 9x Okay, so I'm at like a 9x trap. So it's a big fat trap. If this thing drops, that's a pretty nice looking trap. So this would be a 6A 112. All good? So that gives you a sense of what 6A would look like. Should probably save some of these pictures. I'm going to do that. Hang on. Okay, so there's what a 6A would look like, and just I'm going to save it. Give me 1 second. All right, I just want to make sure I save some of these pictures because maybe we can put a little manual together or something on this. All right, so there's 6A. 6A works. We figured that out. All right, so let's take a look what else we want to do. Maybe the euro. I've got a strangle in the euro right now. It's been a little bit more of a struggle, but let's take a look at putting on something here. So we would go out 60 days. I'm going to take a look at roughly the 25. So we'll do the 23 delta with just one strike width. And then let's look at the 1005. So 6A, another big multiplier here. So this is a 125,000 multiplier. All right, so big multiplier here. Let's take a look and see what this trade looks like. I don't know why Tasty continues to do this, but anyway. All right, so now let's take a look. How does this trade look? All right, so we're 60 days out in the 125,000 multiplier, remember, on 6E. Now, $113 and buying power is 1340. Okay, that's an 8.4% return. I like it. Okay, gives me 8.5% return in 60 days. That's pretty fantastic to me to earn 4% a month. Why wouldn't you stick about 50 of these things on? So that's a pretty good trade. The trap here is almost six plus times, almost not quite 7 times. Okay, 738 divided by the 113. 738 divided by 113, 6.5. Okay, so naturally, I'm getting pretty close to being right on these. So that's a nice trap, a little over 6x. So again, my traps are normally close to 6x. You can make them smaller. You can't make this one any smaller anyway, because that's as narrow of a put debit spread that you can get. You can't get more than one strike apart, or less than one strike apart for it. You could do more, you could do less. If you wanted to do, if you wanted to bring, the naked puts up, you can get more in the tail, but you want to risk the lower end being closer. All depends on what your feeling is on 6E, which is the euro futures. Euro has been a tough go. Its low has been 0.095. Okay, this is above that. All right, so I'm not going to probably want to move that up, and I'm not looking at naked puts, but I do like the way the chart is starting to act. If we can get the dollar to continue to back off a bit, and the dollar has backed off for 5 straight sessions, RSI, MACD all heading lower on the daily, MACD on the weeklies turning over. I like the fact that the dollar has weakened a bit. Really great for all of these trades in futures. So here's what a 6E would look like. Let's go ahead, take a picture. And I'm going to save that one. Sorry for the dead air on this. I know that's probably not the best thing to do. All right, so there's 2 trades. Let's see, there's some stuff in chat here. Yeah, $297 per contract on Interactive Brokers for HE. Tom, would you walk through the put debit spread on a 112 when close to expiration? Out of the money in the money. All right, I will take a look at that. And then I'm going to guess Kevin is here. All right, so let's take a look at the next one. that we can. So let's pick another one. Let's pick oil. I've got strangles. I got 112s. A couple of the strangles are down. The 112s just slightly down, but it's only 1 day old. But let's take a look at the oil strangle that we just put on in oil, and let's see what would happen if we put on a 112 in oil. So we're going to go out 65 days, close to our 60. I'm going to pick I've already set this up, so I'm just going to mimic yesterday's trade. Now, to me, 75.74 is again a $1 PDF wick, okay? Because we're on, again, 1% is the rough guesstimate on width, okay? So this is a $74 and $82 underlying. 1% of that would be 0.8 or 1. Okay, so I want to stay around 1. So 75.74 is exactly 1 wide. So that's how I picked my PDS. And then I'm going to go down to about the 5 delta. This thing's moved a fraction, but my 5 delta right now is about 61. I usually will take the higher if there's more than 1 5 delta. I want the highest strike, 61. I think 61 is fantastic. Apparently, that's where Janet Yellen is going to be buying oil to replenish the strategic petroleum reserve that Biden drained. I don't know how she's going to do it at 61 when it's at $82 now, but apparently she has magical powers. Anyway, so there's the trade. Let's take a look at what this thing looks like right now. Does this trade hold water? Okay, so tail profit, and again, multiplier on CL is 1,000. Okay, so everybody hopefully knows by now we've traded enough oil, but CL is 1,000 as your multiplier. All right, I'm getting 53 cents for this thing, so I'm going to make 530 in the trap. $530 divided by the buying power, the initial buying power of 39.11 is going to be roughly 14%. Oh, hell yeah. So it's exactly why I put one on yesterday. I love the fact that oil is rocking and rolling higher. It's down a tad today. It's down a whole 20 cents. Beautiful day to throw on one of these trades. I don't think oil is going down to 60, so Janet Yellen will not be buying any oil. But I think oil can only stabilize somewhere in that low 70 range. I don't think we're dropping below 70 on oil. I think oil was overdone yesterday. I think as we calm down, and I kind of brought this up yesterday, I think oil will relax in the next couple of days. It was on a downtrend to begin with. So again, using just a little basic technical analysis, the weekly trend is down. The daily trend is a little bit of a reversal, but it was trending down as well. The reversal was caused by a war breaking out in the Middle East and got everybody in a panic, even though nothing to do with oil is involved at all yet in this war. So again, I think it's going to calm down a bit, but we got a little bit of a spike. However, despite that spike, the trend is down. So I still think oil will fall a little bit more at this point in time, but I'm okay with it. So anyway, we are 1 wide. Now, the trap on this is only about a 3x trap. Can you get more? Sure, you can try to move this around a bit. So if I'm going to do like 1.5 on the PDS, now I'm still making 390 on 37.44. So I'm still making 10% in the tail. And now my trap is what, 1890 divided by 390. Now it's almost 5x. Okay, this would be to me a better trade than the one with the 75.74 trap, which is totally fine. This gives you more income, okay, but this gives you more trap. So if I widen that PDS, a little less income, but still 10% in 2 months, that's pretty doggone good. Okay, so 10% in 2 months, pretty doggone good. We'll take that, but I'm happy to to take more, and I could go up to 76, so I can go 2 wide on this. I'm making 240 on 35.89. So now I'm at 6.7% in the tail. That's still fine. That still meets my 3% criteria. I could do this trade, and now if oil drops, which I am a bit bearish on oil overall, but I'm not below 60 bearish. Okay, if this thing drops below 76, and it was on a path to do that, it was down to 82 in that particular contract. Let's look at the F4 contract. See if well, it's now Tasty's just thinking, or Toss is just thinking and confused. All right, so we'll keep an eye on that. But at last glance, this contract was a bit lower. I think we can look at the table and get a sense of these different contracts potentially. Yeah, so right now oil for this particular contract that we're looking at is 82 versus actually 86 right now. So this futures contract, and look at oil. So if you look at today's current contract in oil, it's $86. Okay, the next contract out, which we'll be flipping to in a week, okay, is 84, which is lower. And if we start to flip out here, out to about 60 days, oil futures are at 82. So the futures are saying that oil is lower, going to be lower in the future. That's what's being indicated here. So how does that play into our 112? Well, I think it plays pretty nicely. So if you think oil is going to be a bit lower, then maybe you adjust your trap to be a little bit wider. Does this make sense? Yes, yes, and yes, I hope. Standard trap size, totally fine. Great income, smaller trap. Widen it by 0.5 point, a little bit nicer trap, a little less income. It's a trade-off, and then you can go even wider. You're still making good money out here. You're still making close to, I think, what was it, 8% or 7% with a big fat trap here of almost a 10x size trap. If you think oil is going down, you could certainly do that. So moving these around gives you an opportunity on oil. Let's do one more. Let's do gold, because gold's a hard one. And then we'll jump into maybe a bond or something. So I find gold to be very difficult to put 112s on. It's also got funky strikes. So let's take a look. We're going to have to go out to almost the 77-day here, and let's see what we can do in gold. Gold, if I was looking at 1%, it'd be like an 18 wide, something like that. But let's just start like a 10 wide PDS. Okay, it might have to be, well, you know what, let's go at a 15 wide PDS. So we'll go at a 15 wide PDS here, and then let's look for our naked strikes around 17.15. Let's see, maybe we can make one make sense. We'll see. And there's my overall gold trade, by the way. I love the fact that this looks like this. If we drop it back to 1800, we are going to be happy campers. All right, let's take off all of these other strikes because it doesn't automatically do it because Toss sucks at some of these things. All right. All righty. So here's what gold looks like. Did we do it? All right, so based upon everything that we put on here in our standard format, we're getting 240 in the tail, okay, divided by 55.68 buying power. This is only a 4% tail. I'm not getting, I can't get 4% in 77 days. It doesn't make any sense for my account to achieve only 4% in 77 days. I'm going to need to make closer to 7 to 8%. Okay, you want to make something closer to that. So, and if you consider 30 days, I want to make 3%. Well, I want to make 1% every 10 days, right? So if I'm at 77 days, I need to make 7.7% return. Okay, not difficult math. So what can we do to fix this? Number one, we could move this PDS a little tighter. So maybe we do a 10 wide PDS. How does this fix it? Let's see. Now we're making $340, and gold's at a 100 multiplier. So when we're looking at gold, it is a 100 multiplier. All right, so $340 divided by my buying power initially here of 56.92. That is 6% on the dot. I can't. I need 7.7%. I need 8% almost on this trade. It's not enough. Now, there's a couple different things you can do. I can tighten up this put debit spread. how's my trap looking? It's at $1,340 here, divided by 340. It's a 4x trap, so it's not a huge trap either. So it's quite kind of not meeting those. I could move this naked put up a fraction. Let's try moving it up to 720 and see what that did for it. Now I'm making 380 in the tail using 5886 in buying power. Now I'm at 6.5%. I'm not there yet. Got to move up. So let's try 1725, okay, which puts me at 440 in the tail using 6107. Okay, now it's at 7.2%. I'm pretty close in here on this. Could I go up a little bit more? Potentially, I could maybe go to 1730. That would give me 490, and I know 490 divided by the 6332, 7.7%. This would be a perfect trade for gold. Okay, so this is how I would want to lay gold out. Now, 1730 on the downside is how does that figure in? Because we've had to move this up a little bit from the initial 1710. So we've had to come up 20 points to about 7 delta. 7 delta is not a bad place. I put a lot of my strangles on at 7 delta, so it's not the worst thing in the world anyway. It's a pretty good little trade. So this might be a decent trade on gold if you wanted to run a 112 on gold. Let me take a picture here real quick too. Has this been helpful? Does this make sense to everybody? Hopefully it's helpful to everyone here. And let me save this thing. And I got one yes. I'm just kidding. Don't flood it with yeses. All right. So this is GC. Save it. Bingo. All right. All righty. So there's gold. So I can make gold work. 1730. So where's 1730 compared to where we are now? We're at 1892. Okay, that's 162 points down divided by the 1892. It's about a 9% drop. It is not like a 20% drop like many of the other 112s are. So it's a little tighter. You got to feel a little bit more comfortable on gold here, I think. I like 1800 to 1820 as my support areas on gold. So I do feel pretty good on gold, especially here. I really like the bottoming action we're seeing on gold. It is in a downtrend weekly, and it is still in a downtrend on the daily. However, RSI, MACD are definitely improving on it. So I think 1820, 1800 is a pretty good level. However, we've been down as low as 1618 just a year ago. So that's, not within the realm of this trade. It's, if we go back to previous year's lows, we're outside of that. So that's why gold to me can be a little tricky for the most part as we look at those. Okay. And then if we did it on ES, I think we're all familiar with ES. There's what my ES looks like right now, by the way. So we're sitting up here. Man, if we could just drop to 4,000 on this and realize about $48,000, that would be a pretty nice way to end the year, in my opinion. Most people would freak out if we went to 4,000. That's 10% down from here. I'd be ecstatic if we did that. Yeah, quote me now. Who knows what will happen? All right, but ES, 65 days. Boom, we know what we're doing. We can put one on. Well, we kind of already have one here. We'll do 50 wide because it's about a 44 wide, so which is 1%. So we do a 50 wide. Bam, we go on down. This has moved on us a tad down here. Boom, put this on 1350. Take a look. Get rid of all the other stuff and just keep these strikes on. And here's where we are putting on a standard 112 in ES, where we're making $663 in the trap using 7,200 in buying power. This is a 9% return in 66 days. Okay, 9% return, 66 days. write this thing down anyway. So if I'm doing this particular one, and my trap here, 3,100, okay, is 5x. So it's good shape. So a trap is a good proportion. This 37.25 on the low end, okay, from 4,400, which we just hit 4,400 on ES. Here is $675 lower from here, divided by the 4,400. Okay, is a 15% drop. So we would have to drop 15% to get to the bottom of this trap. Okay, I feel pretty good with that, with the down move we've had. Can we drop 15%? We can, as long as we don't get there tomorrow, and as long as we don't get there in 66 days, it's okay with me. We can keep dropping 1% a week for the next, 8 weeks, and we're going to be in great shape. So it's fine with me. I just don't need a 10%, 20% drop tomorrow. Then we're going to be a little red in here, but there's all this cushion to go. So there's the ES 112. And that's how that one would stack up. Now, remember, we're making $663 using 7203. Okay, 663 using 7204, which to me is 9.2% on this one. So nothing wrong with putting this 112 trade on. Standard 112 and ES, go ahead, put these on. Now, why would you do a long-term 112 here instead? Okay. Why is not everybody on the same page here? Somebody didn't come along for the party. Oh, I hate this guy. Did not. I don't know why, but he is not. All right. I love how Tasty will just open up every previous expiration act. You know what? Who cares? All right. Let's take a look now at the 129 days. So if we were doing the 112 long-term version of this trade, okay, this is what we would see. Here, we'd probably make a slight adjustment to it. Okay, so this is what the long-term 112 version would look like. Okay, 120 days out, 50 wide, starting at 24 delta, get the 5 delta 2s here. So how does this thing look overall? So here's the long-term 112. Now, what did we do on the long-term 112? Well, now, if you remember, one contract previously was making us $663. On the long term, 123. Yeah, so $1,240 using 5,800 in BP. Okay, what's the return on that? So 1,240 divided by 5,800. Okay, this is now a 21% return. A 21% return in 4 months, twice as long, okay? But instead of 9.2%, I'm getting a 21% return, and look how far down this thing has to go, okay? 1,000 points down from where we are now, okay? Okay, which is a 23% drop. So the markets can drop 23% in 4 months and not even hit our target, 1,000-point drop. Doesn't mean it can't happen, okay? But I like this odds. But now, look, my buying power went from 7,200 to 5,000 because I went farther out. Okay? So buying power dropped and income rocketed from $663 to 1,240. Yes, we're twice as long. Okay, so you got to figure out what is that. That 1,240 divided by 4 months is $310 in income versus $330 for the 60 day. So they're almost making the exact same amount of money per month. Okay, they're generating the exact same amount of money per month. However, I'm using less buying power here, so I could put more trades on. I can't put 2 of these on, but I can get more of these trades on. But if I'm not laddering, it doesn't matter. I would stick with the 60-day version is what I would be doing. So that's a little bit of that. I don't, any other questions you guys want to jump into here? We did put on a naked put in gold yesterday. That thing's up 11%. I'm liking the naked put we have in gold. Here, I think down here around 1765 is a good area to be in. We did put on a naked put in oil yesterday. That thing's up 7%. I like the 70 range in here. I probably will continue to add more gold, more CL. Now here's bonds. So this is where we are on the bonds. We are up 40% in one day selling this naked put. And guess what? TLT is down today, but yet in ZB, not only is ZB up fractionally, our naked puts are up 40% in one day. And if you were doing this in TLT, you'd actually be down on the day. So why I love futures, gives you an opportunity to put on some unique trades. AMD, we put on this credit spread yesterday, and that's up 27% in one day. You'd probably take that thing off and book the profit. I mean, at 50% is my target. I could probably put another something else on. Meta's up 12% in one day. This is a butterfly trade. Why did I butterfly Meta? Okay, so here's the butterfly in Meta. Here's the butterfly in Meta. Why did I do this? Well, the reason I did this was I would have looked to put on a credit spread on Meta as opposed to this butterfly. However, when I looked at the chart, okay, let's look at the chart. I know I'm straying off our main subject matter, but I got a few minutes and let's just have some fun in here. All right, so here's Meta. Beautiful breakout of that of the falling wedge, or really kind of not even a falling wedge, just a descending triangle more than anything. But we called it right here on this breakout. Got in. It's continuing to move up. I mean, it's a pretty good telegraphed breakout. It looks good, but I think this thing can fly. And I didn't like any of the put credit spreads down here. I thought this could move quickly up to 330, which is the top of this 3 ATR. So that was my goal, was to get to the 3 ATR. So I centered this butterfly at 330. I thought faster moving than AMD potentially. It's a bigger stock. It's a $320 stock. It moved $4 today. What did AMD do? Well, AMD's not having a bad day. Here's the descending wedge that we were in, broke out, same exact pattern. Had a little bit of a pullback yesterday and then up nicely today. Okay. Totally fine. I could have probably put something up in here and done a butterfly here as well. However, it's a smaller stock. So even though they're both up today, with Meta's up 1.2%, AMD's up 1.8%, but AMD is almost up $2 and Meta is up over $4 on the day. That's why I like to do the butterfly, because on a bigger stock, it can move into my tent a little bit quicker on that. So that's why I picked the butterfly on there. Also, the butterfly uses up almost no buying power on there. I think I don't even think buying power even registers on my account for this. It's saying 0. Okay, while I'm using $5,000 for AMD. Everyone's favorite TLT. Look at it here. It's still down. It's down on the session. It tried to peak up, but it's not. So everybody that piled in, at the end of the day yesterday is now down on TLT. But MACD is rising. RSI is rising. We're not to the 50 point yet, but it looks decent. But you're still in both of these two different downtrends. I got one with the purple line, one with the blue line. You're in both downtrends. Can you go lower? I think so. Can rates go higher? Possibly, but rates have tipped over as well, and RSI is running for the hills right now. So rates are coming down, but TLT, it ain't moving much. And what's just for the heck of it, TLT, what's the IV in that thing? Well, it says 56, but I don't, I can't sell puts in this thing. And why? Let's take a look at TLT. Let's try to trade some puts. What were these puts? These were, I did a 45-day because I just like to go out on this bonds and about 10% down. So I went about 10% below the market. I went out about 45 days. If I'm looking at TLT and we go out 45 days and I go about 10% down from here, I mean, I'm probably somewhere around this area. What did I get on ZB? I took in roughly, and the ZB multiple is obviously much higher, but 40%, I'm almost at 50%. I'm going to win 150 bucks at 50%. This is a $300 trade. Okay. On TLT, if I would put in, give me a moment here. Let's just make sure we got everything lined up. On ZB, I took in 313 bucks. Okay. Like I said, $300 on it because of the way ZB is calculated. On TLT, if I went to 45 days and I put something on that's roughly 10%, it would probably be closer to 75, but we'll just leave it here. Okay, you're making 54 cents. Okay, if I was to take in $300, it would cost me $6,392 in margin. Okay, well, that's not going to quite do it because what do I want to do when I put on either naked puts or call spreads? I want to get like a third of the, or a quarter of the money or something in there. 312, 50% of that would be like $155, 156 bucks divided by 6,392. Even if it expires tomorrow, it's only a 2%, 2.4% trade. There's no juice in TLT. It's fine if you're buying because there's no juice in TLT. You're not paying a lot to buy TLT, but if you can't really sell puts on TLT, that's 6,000. You know what I paid for my ZB, my bond futures? I took in $313 in cash on $1,800 in margin. Okay, that's like a 17% ratio. That's pretty doggone. That's a return on capital of 17% if that thing closes. That's a pretty good deal. I'll take that. But 313. Hopefully this is making sense for everybody. Divided by the 818, and that one was about 17, 20%, somewhere in there. So it's about 1/5 of the width. Here, man, you are 1/20th the width, or 1/20th the buying power is all you're taking in. You can't make any money that way. So selling TLT here, not great. Now, maybe you could put on a credit spread, okay? Still a crappy looking credit spread. 210 bucks on 2,700. It's not terrible, but I don't think I would do that when I have ZB available to me and I have it at half the margin of even a credit spread in TLT. I just don't see a reason to get into TLT unless you're, I don't even know why, unless you're buying it. You have to buy it, or you got to write close to at the money puts and be willing to take assignment because you know in a year and a half or 2 years from now, it'll be going up. Okay, hopefully that makes sense. We're almost to the top of the hour. So we got a little bit of everything in here. This is why I like ZB. Okay, all those people that have gotten destroyed on TMF and are down 40%, we're up 40% in 24 hours. Okay, the power of futures, folks, the power of futures. Okay, leverage can be your friend if used correctly and if you understand what you're doing in there. So I like it. I think I'm going to write some more on ZB. I think I want to put some other trades on. It's barely changed on the session. So ZB hasn't really moved. It is almost completely unchanged on the day, which makes me think that maybe I should put on another trade. Down in here, I can still take in some decent cash on this one. If we went 10% down, we'd be right around here, maybe at 19. So somewhere around here, we're taking about 300 bucks on 1,800 in cash. So I think I start laddering puts on ZB here out about 45 to 60 days. I think that's what we're going to play. I'm pretty excited about that opportunity, as well as doing the same type of thing on CL. I think getting out oil-wise to 60 days. You could do 90-day as well. You can do leaps, kind of not leaps. Okay, don't tell me it's leaps. 90 days out. You can put on this 90-day strategy around that 12 delta-ish. It puts just around $65 on oil. And look what you can get on oil. $1,160 for only $3,500 in margin. I think that's pretty doggone nice to sit there at 65. If oil moves back up or holds above that, I think we're going to do really, really well. I'm going to give oil another day or so to see if it starts to head back lower. Right now, oil is down on the session, by the way. So oil is down 45 cents, which is what we thought would happen. I'm waiting to see if maybe we get any further pullback to erase some of that gap up that we had yesterday on oil. All right, guys, I hope this was really helpful to you. How to trade 112s in futures, how to put them on, how to size them properly, what to look for. Again, my keys in the trade. I start about 60 DTE, okay, give or take 5, 60 DTE. Okay. Because it's 60 DTE and I want 3% a month, I need to get at least 6% in the tail. If I don't get 6% in the tail, I don't want in. I need at least a 4x to 6x minimum trap return as well, which is what I'm looking for. Okay. The width of the PDS is approximately 1% of the size of the underlying as a starter. Now you can go up and down from there until you can make it make sense for you. And then I will start my long puts at 25 delta, and I will start my naked puts around 5 delta, and then you'll massage it from there to make sure that it makes sense. Okay, there's your techniques. That's how to do it. I hope that helps. You guys have a fantastic rest of your day. We'll pop this in the Discord for everybody. I think it's a good session. I had fun. You guys all take care. We'll see you in Discord. All right. Thanks, everybody. Bye-bye.